Good morning and welcome to the area Securities Markets Update. Beginning with the latest U.S. figures that were released yesterday, and as we mentioned in our previous report yesterday, the entire data sets came in with disappointing results. First of all, Flash Services PMI unexpectedly stabilized at 61, despite the fact that it had been anticipated to rise to 62.3. On the other hand, pending home sales showed for the first decline since 3 months by 1.1%, which is the biggest monthly decline since January of this year, comparing to a rise of 6% in May, while it had been anticipated also to decline by 0.2% only. As for the Asian session today, a collection of economic figures were released from Japan and Australia, which had a medium impact on the markets. Beginning with Australia, at the beginning of the Asian session, the S&P credit rating agency affirmed Australia's AAA/A+1 rating with stable outlook on monetary and fiscal flexibility. In Japan, the finance minister stated that the government to decide on further sales tax hike by the year end, as the government sees more than 70% of companies will recover by the end of July, despite the continuous slowing down in the economic activities. Japan household spending also fell less than expected, but posted the third monthly decline in a row, declining by 3% in June comparing to a decline of 8% in May, while it had been anticipated to decline by 3.7%. The unemployment rate also in Japan unexpectedly increased to 3.7 in June, while it had been anticipated to remain stable at 3.5, which is the highest rate since February of this year. The retail sales also fell more than expected, declining by 0.6% in June comparing to another decline of 0.4% in May, posting the third monthly decline in a row, while it had been anticipated to decline by 0.4% only. Back to Australia again, HIA new home sales increased by 1.2% in June after a decline of 4.3% in May, which is the biggest decline since August of last year. As for the European session today, we will be watching 3 economic data sets from Germany and the UK. German import price may rise for the first time since December of last year by 0.3% in June, comparing to no growth in May. And as for the UK, net lending to individuals may decline to £2.6 billion in June, down from £2.7 billion in May, while the mortgages approvals set to rise to 63,000 in June, up from 62,000. Going forward to the US session today, 2 economic figures will be released, which are likely to have a limited impact on the market ahead of tomorrow's GDP, ADP, non-farm employment change, and most importantly, the FOMC decision. S&P/CS Composite 20 House Price Index is expected to slow down slightly to 9.8 in May, down from 10.8%, which is the 6th monthly decline in a row. And finally, the CB consumer confidence may rise to 85.5 in July, up from 85.2, which would be the highest since January of 2008. This is it for today. You could follow us on our social media sites, Twitter, Facebook, and YouTube to get the latest economic releases, reports, and analysis. Thank you for watching.